Hey everyone, welcome back to Corporate Decoder, the place where we dig into the sometimes confusing world of corporate filings. Today we're looking at a report from ReAlpha Tech Corp, and let me tell you, it's a bit of a roller coaster. It's got everything. Deals gone wrong, new deals to fix the old ones, and even a lawsuit. So buckle up because we are about to find out what is actually going on. This is a Form 8K which companies file to announce big news to investors. Think of it as a corporate breaking news report. This one is from March of 2025, so it is pretty recent. Scroll Mutual Settlement and Release Agreement with CAP Unreal Estate Inc. Scroll. First up, we have a situation involving a company called Unreal Estate Inc. It sounds like ReAlpha made a deal with them that didn't quite go as planned. Back in November of 2024, ReAlpha bought a company called US Realty from Unreal Estate. They also agreed to buy some convertible promissory notes, which are basically loans that can be turned into stock from Unreal Estate. They also agreed to buy some convertible promissory notes, which are basically loans that can be turned into stock from Unreal Estate. But something went wrong, because in March, ReAlpha and Unreal Estate decided to call a truce. They entered into what's called a mutual settlement and release agreement, which is basically a fancy way of saying they agreed to settle their differences and move on. To make things right, ReAlpha paid Unreal Estate $80,000. They also kept full ownership of US Realty, which they bought earlier. Importantly, they released each other from any further claims related to the original deal. This means they can't sue each other over it later, with some very specific exceptions relating to claims given by ReAlpha. Also, the note was cancelled and the letter agreement was terminated, so it looks like they are trying to draw a line in the sand on this deal. Next, let's talk about Streeterville Capital. ReAlpha had an outstanding secured promissory note, kind of like a loan with them. To simplify things, ReAlpha and Streeterville Capital agreed to an exchange agreement, scroll the partitioned IFSNOD in the original principal amount of $20,000 scroll. They created a new, smaller note for $20,000, which they called the partition note. Then they exchanged that note for shares of ReAlpha stock. Streeterville Capital received 15,873 shares of ReAlpha's common stock. This exchange was done at an effective price of 1.20 stock this dollars. Terrace dilutes the value of existing shares, but it helps them hold on to their cash. Now for some more news, it looks like ReAlpha is facing a lawsuit. A company called GM Yield Bahamas Limited, or DeFi, filed a complaint against them in New York. This has to do with a warrant to purchase common stock, which GBL received from ReAlpha back in October of 2023. Warrants give the holder the right to buy stock at a certain price in the future. Goals BRBL is claiming that ReAlpha breached or violated the terms of the warrant. They're also asking the court to declare the warrant valid and enforceable. GBL wants monetary damages, meaning money, for the breach, as well as specific performance of the warrant, which would force ReAlpha to honor it. They are also seeking attorney's fees and litigation costs. ReAlpha says it intends to fight these claims in court. This could be a long and costly battle, but ReAlpha seems determined to defend its position. Now, what does all this mean for ReAlpha? Well, it looks like they're dealing with some challenges. The settlement with Unreal Estate suggests that their initial deal wasn't as successful as they hoped. The exchange agreement with Streeterville Capital shows they're trying to manage their debt in creative ways, but it could dilute the value of their stock. And the lawsuit from JBL adds another layer of uncertainty. On the one hand, settling with Unreal Estate allows them to move forward without the risk of further legal battles, exchanging debt for stock. While dilutive can preserve cash, but the lawsuit from JBL is a significant risk as it could result in substantial financial damages and force them to issue more stock at potentially unfavorable terms. In terms of opportunities, ReAlpha is operating in the real estate tech space, which has the potential for growth as technology continues to transform the industry. They also need to be careful about managing their legal risks and maintaining positive relationships with their investors. Overall, ReAlpha appears to be a company at a crossroads. They're facing some challenges, but they also have opportunities to succeed. Their ability to manage their legal risks, control their debt, and capitalize on the growth potential of the real estate tech market will be crucial to their future success. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives. What do you think about ReAlpha's moves? Let me know in the comments below.